Hi guys, good morning and welcome to week 2 of the Homebuyer Bootcamp video series. As I mentioned last week, this week we're going to be talking about pre-approvals and lenders. So a couple things first, a lot of people tend to get really nervous when it comes time to get their pre-approval or when it comes time to talk to a lender. I think it's kind of the same thing like when you go to file your taxes and you're like, okay, I really think that I did everything correctly, but like I'm not sure. Am I gonna owe? Am I gonna get money back? So on and so forth. So I think that's kind of how it feels when it's time to talk to a lender. But I'm here to tell you that it is not scary. It doesn't have to be a big thing. They're not going to be overly invasive, especially for your pre-approval. They really just want to make sure that they can get you the best possible deal, the best possible interest rate, the best possible terms, for your pre-approval and for your mortgage lending. So I'm going to answer some commonly asked questions today, and I'm going to go over the process of getting your mortgage pre-approval and also what you should look for on your pre-approval. So for example, I don't want you to get stuck into the trap of not knowing how much your mortgage is going to be when it does come time for you to, actually go under contract. So before we jump in, since it's 10 a.m., I'm drinking iced coffee. I don't know if it's really nice out where you are right now, but right now it's like 70 degrees already here, and I'm so excited. It just kind of feels like it's spring or summer. So let me know if you're also drinking iced coffee or if you like to drink hot coffee instead. Okay, so the first thing for your pre-approval, do not go to a big bank unless they're offering some unbelievable program. So what I mean by that is, even though, let's say you have Wells Fargo, even though Wells Fargo already has all your checking account info, they have your, savings, they might have your retirement account, whatever, they know your name, they know your social security number, they're going to make it seem like it's easier. Having it be a little bit easier up front is going to make your life a lot harder down the line, because right now with the market being so competitive and just in general, if you want to make an offer on a house on a Saturday, Wells Fargo's not open. Your lender is not going to be able to help you until Monday morning, and that's going to put you at a huge disadvantage. Typically, big banks, they end up, saying that you're going to get a really great interest rate or saying that you're going to have lower fees or whatever than working with a small lender, but they end up kind of hiding those fees, and they can cause delays down the line. So I highly recommend working with a local lender. If you need any recommendations, I'm happy to send them over. There are cases that I recommend working with big banks when they have kind of unbelievable deals going on, when they have grants, things like that. But that's kind of a case by case basis. I definitely recommend that you start off with a local lender and see what they can do for you. So the next thing is, once you get connected with the lender, they're typically going to ask you to complete an application online. On this application, they're going to ask you questions about like, how much debt do you have in total? What are like your monthly bills? If you're currently renting, they're going to ask you about your rental history and how much you pay in rent. They might also ask you questions about what you want to pay for a house, but that's not really going to affect your overall pre-approval. It's just so they can get a gauge of like how far off or how close they might be to what you're actually looking for. And once you submit your pre-approval, they are going to ask you for some documents. So the first one is they're going to want to see 1 to 2 years of W-2s and tax returns. If you're thinking of buying a house, I recommend that you actually move forward with those, gathering those documents and getting these things together like sooner rather than later to make your life easier. So 1 to 2 years of W-2s and tax returns, your most recent pay stubs. So if you get paid online, you can just download that like as a PDF or you can scan it in. They're also going to ask you for bank statements, and this would include not just your checking account, but if you have a savings, if you have like a Roth IRA, if you have a retirement account through your work, you want to try to gather all of those documents as much as possible and submit them so they know your total assets. That doesn't mean that your monthly payment is going to be based on all of those assets. It just means that they can use that to help determine like what your debt to income ratio is. And then if you are currently a homeowner, they'll also ask you for your current mortgage statement to know what you are currently paying out of pocket. And lastly, they'll want to have a photo ID. Even with like a social security number, they still want to know that they are pulling this information, pulling, credit. Hey, Courtney, thanks for joining in. If you have any questions, we're talking about the pre-approval process, the lending process. If you have any questions, drop them in the comments. So when you do submit this application, they're going to ask for photo ID because they want to make sure that they're not pulling credit on some random person. And then 24 to 48 hours later, they're going to send you your pre-approval, and they'll probably give you a phone call to help sort of walk you through, like, if they need any other documents, if they have any questions for you, if there's something on your pre-approval that they should highlight, if there's a specific program or like a first-time homebuyer program that they're using. So on your pre-approval and on those initial lender documents, you definitely want to ask some questions, and you want to make sure that you are looking for some specific things, okay? A lot of people get the pre-approval paper from the lender, they do a happy dance, and they never look at it again. And that pre-approval document is going to be important throughout the course of your, transaction. It is also going to be what your monthly payment is based on. It's going to determine your purchasing power. So there's a lot of important things that you want to look at on that pre-approval document or on your initial lender documents, because not everything will be on the pre-approval. Okay, so the very first thing, which is what everyone's going to look for, is how much are you pre-approved for? Okay, are you pre-approved for 200,000? Are you pre-approved for 600,000? Are you pre-approved for what specific amount? Okay, everybody's going to look for that. But these are the things you need to look for after that. So number one, you want to figure out what type of loan this is, okay? So first of all, you want to determine, is this a conventional loan, okay? With a conventional loan, that's typically the most ideal type of loan. That starts at about 3% for your down payment, so putting 3% down, and then it goes up from there. With a conventional loan, you're not going to have as many contingencies during the transaction, so that's the most ideal for when you're making a purchase. Another type of loan is an FHA loan. FHA is a government-backed loan. There are more requirements, there's more contingencies, there's more rules for that, okay? So with an FHA loan, your down payment is 3.5% for the most part, and you can expect that you're going to have to take care of a couple additional things for FHA because it's a government-backed loan. This is a great option for people that might not qualify for a conventional loan, but still want to get pre-approved and still want to purchase a house. The next one is a VA loan. This is for veterans. If you're a veteran or you're currently in the military, you can actually buy a house for $0 down, okay? It's a really amazing program. It is just like FHA in that it is government backed, but your down payment is literally $0, and there are ways that you can mortgage your closing costs or use first-time homebuyer programs. I have seen veterans walk away from the closing table having brought $0, literally getting a house for zero. So if you are a veteran, I definitely recommend looking into that as an option. It's a really great program. And I believe I think they let you take out actually your first 2 mortgages at that same amount. And then there's also other types of loans. So if, for example, you're buying like a major fixer-upper, you might end up getting a construction loan or a 203K loan. Those kinds of things, they're more specific. You would be way more in communication with your lender. Another common type is a doctor's loan. So actually medical doctors are also eligible for $0 down, and there are special financial programs for them. Now, if you do fall into like a special category, we can get you connected with a lender that specifically works with that. But for the most part, the majority of buyers are either going to go into the conventional or the FHA bucket, okay? So the next thing is, how much are you expected to put down? On your pre-approval or on your lender docs, they're going to ask, they're actually going to give you a percentage of the purchase price that will be your down payment, okay? So like I said, with a conventional loan, that starts around 3%. With FHA, it's around 3.5%, okay? It's important that you look at this because, that's going to give you an idea of what your down payment is. That's like the minimum amount that you need to have to put down on the house, and then you'll have your closing costs on top of that. And then after that, you want to take a look at your interest rate. Interest rate will help us figure out what your monthly payment will be. It's also going to give you an idea of, kind of where you fall with interest rates. And later on down the line, if you choose to refinance or something like that, you'll just have that in the back of your mind of what your current interest rate is. And then you also want to get a closing cost estimate from the lender. A lot of people don't do this, but I like to ask as soon as we get the pre-approval, if you have a general idea of where you're looking, like a full county, for example, it doesn't have to be city specific because it's just going to be an estimate. You can actually ask the lender to give you an estimate of what your total, like every penny that you will need to bring to closing, so you can start budgeting for that right now. And then you want to find out if there's any first-time homebuyer programs that are being utilized. There are some really good ones right now that actually are grants for first-time home buyers. There are some additional, sometimes there's additional rules and regulations like where you would have to purchase for that. So you just want to know if you're going to be utilizing one of those programs, if you need that to qualify, and also seller's assist. So seller's assist is when you mortgage some of your closing costs. And so with that, we would just want to know in advance what it is that we would be expected to, come to the table with and what additional terms and conditions there would be on your loan. And then lastly, and this is the number one thing people forget to do, is what is your expected monthly payment at this pre-approval amount, okay? So if you were to max out your pre-approval, what are you going to be paying every single month? The typical mortgage is 30 years, okay? So even if, in 30 years from now, your monthly payment is going to be the exact same amount if you choose to stay in that house for all 30 years and you don't refinance and you don't take any home equity loans and so on and so forth. But literally, that could be your monthly payment for the next 30 years. It's not going to change. Like rent is going to go up every year. Your mortgage payment is not. But is your mortgage payment going to be comfortable for you today or a month from now or a year from now? And that's what we really want to focus on because, with your pre-approval, there are some times that the lenders can kind of max it out and it might work for the numbers, but when you really look at the numbers, you might say, hey, like, I wish I had a little bit more money so that I can take my family on a vacation every year. Or I wish I was keeping a little bit more money in my pocket so that I can upgrade my car in a year or something like that. So we want to actually make sure that we know with the lender, hey, what is my monthly payment going to be at this amount? And if they pre-approve you for an amount that's way above what your comfortable monthly payment is, then we'll just find you a house for less than you're pre-approved for. You'll be a very qualified buyer for that house, but we still want to know, and we want to know that in advance before you're out and looking at houses and you make an offer and then say, oh my gosh, like I didn't realize that's what the payment was going to be at the end of the day. So those are my tips for what to definitely take a look for and make sure that you really have a solid understanding of on your pre-approval. When you get pre-approved, for my clients, I'm more than happy to walk you through the entire pre-approval and go through these questions with you. I will definitely take a look at that, on your pre-approval document with you and walk through. Hey, Jimmy, we're talking about lender documents and pre-approvals for buying a house. If you have any questions, definitely feel free to drop them in the comments. So the last thing I wanted to go over with, the pre-approval and financing is just a couple of like frequently asked questions and a couple of myths that come up with buying a house. I already mentioned, typically with a conventional loan, you can put down 3% for your down payment. With an FHA loan, 3.5%. A lot of people think you need 20% to put down. I'm canceling that myth. It is absolutely not true. You do not need to put 20% down on a house. You can put down as little as 3%. If you are a veteran, if you are a doctor, if you're a first-time home buyer, we are talking about you putting down even less on a house, okay? 20% down is a thing of the past. Absolutely make sure you skip that. You are coming and closing with way less that you need to put down. If you do choose to put 20% down, there are some benefits to that, okay? You're going to be a very solid, a very qualified buyer. The mortgage company is not going to put additional fees on you because you already have put 20% down. But at the same time, for a lot of people, especially, in our age group or younger, a lot of people actually end up worrying like, hey, what if something comes up in my house? I'm putting all of my savings into this house. You want to make sure you still have a buffer, you still have some money in your pocket. So that's one of the biggest myths. I recommend, you can always pay your mortgage ahead. You can always, decide to put down a little bit more, but you don't want to get into a situation where every last penny that you've ever had is in the house. And, if your hot water heater goes, you don't have $1,000 to replace the hot water heater. The next one is a lot of people think that you need perfect credit to buy a house. That is absolutely not true. I recommend that you try to get your credit score up to about 650. That's a really comfortable place for a lot of lenders. We do have lenders that we work with that can get a pre-approval and, get a mortgage for somebody that has a credit score of 580. But it is a little bit of a risk. And so they're going to be going in, a lot deeper on your documents. They're really going to be doing everything they can to make sure that you're a solid buyer. I recommend do everything that you can to get your credit score above 620, above 650, ideally. Once you get above 750, it doesn't make a difference. So if you're a 750 or an 800 or an 850, you're going to get the same kind of privileges, the same interest rates and things like that. But if you're in like the 650 range, we can definitely get you pre-approved. Once you start to get over 700, you become a more qualified buyer and you can start getting better interest rates, things like that. Um, if you want tips on your credit, I'm more than happy to share them. I personally have been working on my credit since I was literally 18 years old. I'm like a freak about my credit. I'm a freak about my credit score. And so if you have any questions about credit, if you want tips, if you want easy ways to improve your credit score without having to make more money, without having to have more cash in your pocket, please send me a message. I'm more than happy to help out with that. It is Credit is one of those things that's kind of like a numbers game. You can kind of hack it and you can kind of use your resources to your advantage without necessarily having like a ton of cash. And then the last one is a lot of people think you need to have zero debt to be able to purchase a house. And that's also not true. So what ends up happening when you go to get pre-approved is, like I said, the lender is going to actually make sure that they have a good idea of what your debt to income ratio is. Okay. So what they do for that is they actually take your monthly debt payments. Okay. So if you have a car and you owe 20,000 on your car, they're not calculating $20,000 against you. Instead, what they're doing is they are going to be taking your monthly car payment and putting that against your monthly income. Okay, so if you owe $200 per month on your car, that's what they're going to be calculating against what you get paid every month. And they actually calculate everything pre-tax too, so it helps you out. That's kind of one of those things people get worried, like, oh, but I have student loans, I have a car, I have, this payment, I have that. Don't worry. Don't go take out additional debt because you're not so worried about it. But if you do have debt, there are absolutely ways that you can get pre-approved for a house. There are plenty of people that have car loans, they have student loans, they have credit card debt, all of that, and they still get pre-approved. The number one thing I would say is if you are considering buying a house, talk to a lender sooner rather than later. Have them take a look at your finances and ask them, hey, what should I try to pay off first? Or what can I do based on my numbers to actually boost, my chances of getting a conventional loan? Or what can I do based on my specific numbers? And lenders, they have programs, they have kind of ways of building out scenarios of letting you know. And that's one of the best ways that you can actually kind of get ahead of the game. And that's another reason why I recommend that if you are thinking of buying a house in the next year, try to talk to an agent sooner rather than later. Try to sign up for a consult so that even if you're not getting pre-approved like right away, you are taking the time to get your finances in order and get everything straight before you're out and saying like, hey, I need a place. Like my lease is ending, in a month. That's not the place that we want you to be in. We want you to be in a place that you are fully informed, you are ready to go, and you have absolutely everything that you need at your fingertips. So those are my biggest tips for pre-approvals, for, lenders and financing. I am going to be sharing more about this. This is like definitely the number one question that I get is about finances, like how much money I need to bring, what am I pre-approved for? What kind of loan do I have? All that. These questions are the number one questions that I get. So it's something that I'll continue to talk about. And if you are joining because you're part of the First Time Homebuyer Bootcamp, next week we're going to be talking more about how to know that you found a house that you love, how to make sure that you're making the right decision, you're not being too hasty, or you're not going to regret the decision. So we're gonna talk about how to actually find a house that you love, and again, answering some more frequently asked questions. If you do have more questions that you'd like me to answer, please send me a message and I'm happy to get back to you. And I'm also happy to answer them live in the comments. And if you don't have your First Time Homebuyer Bootcamp guide, you can send me a message with your email. I'll send it over to you. You can sign up. There's a link on my Facebook page, or you can sign up on the website. And you can also schedule your free consultation to talk more about home buying if you're thinking of buying in the next year. If you know anybody who's looking to buy or sell, please also tag them in the comments. I'd be more than happy to help them out. I hope you guys have a fantastic Friday and you have a great weekend. And I will see you next week again, Friday at 10 a.m.